Hello everyone, welcome back to today's video. Crypto markets continue to face dump after dump, and it all started when Michael Saylor reportedly sold 32 Bitcoin. But while crypto investors are panicking, many people are forgetting that there's more to these dumps than meets the eye. Yes, your portfolio may be down heavily right now, but that doesn't mean opportunities are gone. In fact, there are still plenty of opportunities in this market. So what are those opportunities? That's exactly what we'll discuss in today's video. We're also going to analyze Bitcoin's weekly chart, because many people are planning for long-term holdings, and this update is very important for them. So do not miss this update. Make sure to hit that like button, subscribe if you're new here, and let's start the video. Alright, so we'll begin with Bitcoin's 4-hour chart, because that's how we do it here. As you can see on the 4-hour time frame, the dump started around this area right after the news about Saylor's sell-off came out. Since then, we've mostly been seeing large red candles with strong volume. Not small moves, but aggressive selling pressure. However, one important thing we can notice right now is that volume is slowly decreasing. This could mean the sell pressure is starting to weaken. Usually, when we see a major move followed by declining volume, the market begins moving sideways. So that's exactly what we'll be watching here. Bitcoin could enter a sideways range between roughly $65,000 and $68,000 before the market decides its next direction. Now let's test this theory further by looking at shorter time frames. On the 15-minute chart, the market continued falling aggressively, then attempted a recovery. But obviously, it got rejected because larger time frame resistance was sitting above. That rejection clearly tells us that this area has now become a strong resistance zone. And after that, you can see the market repeatedly rejecting from the same area, which confirms that a range movement is forming. Inside this range, we can also spot a small inverse head and shoulders pattern forming. Now remember, this is only a 15-minute time frame pattern, so there's always a chance it may not fully play out. But even with a conservative estimate, a breakout could still push Bitcoin toward the $68,000 to $68,500 region, which perfectly fits inside our expected sideways range from the 4-hour chart. Now, if we switch over to the daily chart, things become even more interesting. First of all, we now have a very clear top and bottom range for today. These two zones are extremely important, even for short-term traders. If either of these levels breaks, we could see a massive aggressive move in that direction. If the $65,000 support area breaks down, Bitcoin could easily dump toward the $63,000 to $62,000 region. But if price breaks upward, we could see Bitcoin move toward the $68,000 to $69,000 range. So these are the key levels we need to monitor carefully. Now, many people are asking, okay, the dump happened because Saylor sold, but why did it actually dump this hard? Well, whenever Saylor sold in the past, especially back in 2022, it actually happened near major market bottoms. After some sideways price action, the market eventually continued higher. And another indicator supporting this theory is the 200 weekly moving average. If we look at Bitcoin's 200-week moving average on long-term charts like Bitstamp, we can see this blue line acting as a major support throughout Bitcoin's history. Every time Bitcoin touched this moving average, the market bounced strongly, moved sideways for some time, and then eventually continued upward. The same thing happened multiple times in previous cycles. Price touched the moving average, buyers stepped in immediately, and after consolidation, Bitcoin eventually broke out higher again. And right now, we're seeing something very similar. Bitcoin is testing this sensitive area once again. However, if this level breaks with a confirmed weekly close below it, then the market could bleed very aggressively. Now, this situation also connects directly with the SPX market, the US stock market. SPX has been making higher highs continuously, but historically, whenever SPX moves aggressively upward like this, it eventually experiences a major correction because leverage builds up heavily inside the market. We've seen this happen many times before. And with rising geopolitical tensions like the US-Iran situation, plus the AI rally pushing markets higher, there's always the possibility that if the AI bubble bursts or global tensions escalate, we could witness a major market-wide dump. That scenario could perfectly align with Bitcoin breaking below its weekly moving averages. So this is something we absolutely must keep in mind, because getting trapped on the wrong side of the market right now could be very dangerous. That's why any long positions taken here should be managed very carefully, while respecting these critical ranges. Personally, I've been heavily short in the market. I already shared many of these short positions with you guys earlier, and we made strong profits from several setups. Most of my Bitcoin shorts were taken on Bybit, while many altcoin shorts were on BitGet. We also took an Ethereum short position. Now, another interesting thing during this dump is that Bitcoin dominance actually dropped, which is unusual. Normally, during major crypto crashes, Bitcoin dominance rises because altcoins get sold much harder than Bitcoin. But this time, dominance dropped toward 58.62%, which is quite rare. The main reason behind this drop is ETF outflows. If we look at crypto ETF net flows over the past 30 days, most days have seen heavy outflows. That means spot market backing has been weakening significantly, which is a major problem for Bitcoin right now, because there isn't enough buying pressure absorbing these sell-offs. But historically, whenever we see continuous selling like this, eventually a point comes where the selling stops completely. And that's usually when the market experiences a strong recovery pump. This often happens after Bitcoin dominance crashes as well. So there are currently two possible scenarios for altcoins. Either altcoins dump aggressively from here, or Bitcoin moves higher while altcoins stay weak, and then later both Bitcoin and altcoins dump together. You need to stay prepared for both situations. So on a larger scale, this remains our overall market plan, and you should plan your trades accordingly. Personally, I'm still heavily short biased. I closed many of my BitGet shorts already, but I'm also opening fresh short positions now. Since the market is likely to remain range-bound for now, I'm mainly looking for short entries near the upper side of the range. I'm also holding a few long positions, and if Bitcoin reaches around $68,000, I'll likely close those longs there. If the market starts showing weakness afterward, I'll begin DCAing into my short positions and hold them while watching how price reacts near the $65,000 zone. And if the market suddenly collapses from here, the few shorts we already have open should still generate decent profits, even though the position sizes aren't massive yet. This is basically how I'm managing risk in the current market conditions. Besides all this, there's still a lot happening globally, especially from the US side, and those developments continue impacting the market heavily. You need to stay extremely active regarding global politics because reports suggest a possible US-Iran deal could happen next week, and markets are already reacting positively to that possibility. We're also seeing oil prices pulling back after a strong rally, which is another important factor for market sentiment. So all these things matter a lot right now. If you manage to build a good position, then holding it can be rewarding. But if you get trapped on the wrong side of a trade, please do not hold it emotionally, because the market is currently sitting in a very sensitive area. If those weekly moving averages break down, we could see a massive dump. But at the same time, this is also historically one of the strongest bounce zones for Bitcoin. So you need to trade extremely carefully around these levels. Anyway, guys, that's it for this video. Hopefully you enjoyed it. If you did, don't forget to share the video, smash the like button, and subscribe if you're new here. I'll see you in the next one.